If you are interested in breaking into the buy side, one of the first career decisions you're going to have to make is whether to go for a private equity firm or a hedge fund. There's many other lucrative careers such as venture capital and credit, but I find that most investment bankers, particularly in New York, end up deciding between private equity and hedge funds. These are probably the two most high-paying jobs in all of business, and on paper the work sounds pretty similar. You're constantly analyzing different companies and you're trying to make good investments. But the decision that you make will have dramatic impact on your own career. So first, let's talk about private equity. In private equity, you try to buy companies and sell them for a profit. And the thing is that you are buying whole companies a lot of the time here. You're making huge investments into private companies and taking a controlling ownership stake. So a lot of the time, you're taking a big enough stake so you have influence over the company. You're going to be working directly with management, going to board meetings, and offering suggestions on how to improve the company. You're also working with private companies. That means every transaction you make has to be done within the context of a process. In private equity, you're not making quick investment decisions that can be elapsed in an hour or a couple of days. You're holding companies for long periods of time, and a lot of the times the processes can take weeks or months to get it done. And you're doing a lot of deal work. Deal work is pretty difficult and requires a lot of diligence. It's worth noting that in private markets, when you're investing, you're going to get a lot more information from the company. You're going to get sensitive data that they make available for the sale process. In general, private equity firms try to target a 20% return, which is pretty strong if you consider the S&P typically tracks about 10% every single year. And private equity employs a lot of debt to accomplish this. I think one key feature of private equity is that you get exposed to many different faculties. You get to work on the legal aspects of the deal. You work directly with companies to do operations as well as corporate development, and you're still building skills like financial modeling as well as business analysis. And this is why I think private equity is particularly attractive to a lot of junior people, because you're developing a pretty well-rounded skill set. So now let's talk about hedge funds. And it is a lot harder to standardize hedge funds, but what we're talking about here are generally fundamental hedge funds, so long and long-short equity. So what you're doing at these hedge funds is investing in public stocks. You're really looking at all these public companies, going through their available filings, and then saying whether it's a good or bad investment. A lot of the time here, you're just looking at the pure common equity. In private equity, you might get more creative with the structure, doing something like preferred stock or debt with warrants. But a lot of the time in hedge funds, you're literally just looking at the common equity. A lot of these funds hedge their own risk by going short a couple of companies. So they're saying that some of these companies will do well and maybe some of their competitors won't do well. And if you do it properly, you're able to hedge the risk that you're exposed to. But really, there's a lot of different investment strategies, and it does vary fund by fund. Typically at a hedge fund, you'll be compensated by how much you beat a particular benchmark like the S&P. So at a hedge fund, you're almost solely focused with the finance and investing principles of looking at a business. Day in and day out, you'll be looking at stocks, building models, and trying to see whether it's a good or bad investment. So now let's go through the main factors you might use to consider these jobs. If you're in private equity as an associate, so maybe 3 to 5 years out of school, you're making between $250,000 and $400,000. And part of the deal you're getting is that this is more of a fixed range. You kind of know exactly what you're going to get in private equity. At a hedge fund, your salary is extremely variable with how well your fund is doing. I would say that 80% of the people in hedge funds are going to make between $150,000 and $600,000. The average is probably pretty similar to private equity, but the range is incredible. If you're at a top performing fund, even if you're in the mid-20s, I think it's reasonable to say that you'll make over $1 million. However, if the fund isn't performing well, there's a chance that you don't get any bonus whatsoever. And the floor, I would say, is about $150,000 to $200,000. From an hours perspective, I think you're generally going to be working more in private equity. And I think that's just because doing deals is pretty laborious. There's a certain amount of work that you need to do and diligence that needs to get done. So I think you can expect to work between 60 and 70 hours as an associate, and you'll also have to travel every couple of weeks. On the hedge fund side, I think it does tend to be a little bit more variable. I think most of your weeks are going to be between 50 and 60 hours, although you are starting from market hours. So you'll have to get up and be in the office by 7 or 8 a.m., giving yourself some buffer before the market opens. And if you're on the West Coast, the market only opens at a certain time. So you're gonna have to wake up at 4 or 5 a.m. just to get into the office. At hedge funds, you can get a lot busier around earnings season, which is when public companies publish their own results. So I think you can get up to that 70-hour working range in those busy seasons. I think private equity really shines from a career optionality standpoint. Because you're exposed to so many different faculties, you can go get your MBA, you could go into VC, into corporate development. A lot of people start in private equity and then go to hedge funds afterwards because certain kinds of funds, like activist funds, recruit a lot more heavily out of private equity. I would say that MBA admissions are better coming out of PE because there tends to be more institutional relationships between firms, the founders, and those schools, and there's more a culture of people wanting to go to business school. On the other hand, at a hedge fund, generally speaking, once people are in that world, they tend to stay in that world. I think part of that is because there's slightly higher job satisfaction at hedge funds, but also the skill set that you're developing is very laser focused on analyzing companies, looking at public stocks. So most people tend to stay in that sphere. Another important distinguishing factor has to do with stability. Private equity money tends to be locked up because when you purchase a company, you have to hold it for 5 to 7 years, and as a result, the investors know that they're leaving their money with you for long periods of time. However, at a hedge fund, you're marked to market, which means that people can always see your performance, and quarterly or annual redemptions are quite common. So that means if you're a new hedge fund and you're not doing well, there's a good chance that a lot of people are going to take their money back, and that decreases the job stability for yourself. I think my general advice, especially for more junior people, is that if you're not sure what you want to do, private equity is a safe choice. You can always go to hedge funds after, and you're leaving your optionality open to many other things. But if you've always liked finance, if you always followed public stocks and traded in your PA, or if you want the opportunity to make lots more money, then maybe hedge funds are for you. I really don't think there's a wrong choice. These are some of the most attractive and competitive jobs in the entire world. If you'd like to learn more about private equity recruiting, we have a course on our site that goes through detailed LBO models as well as exclusive headhunter information. Thank you for watching this video. Please subscribe, and I'll see you in the next one.